Welcome, everyone. It's a pleasure to have you join us today. My name is Josef Huttner, and I've been with the Financial Resource Network for a number of years now. For those of you who may not be familiar with our group, the Financial Resource Network has been helping expats, Olim, and dual citizens navigate complex financial challenges since 1992. With our seminars and private consultations, we specialize in finding solutions to the unique financial challenges that arise when you have financial ties in multiple countries. Our aim is to essentially find a comfortable balance for you between the various systems, institutions, legal frameworks, regulatory requirements, and tax considerations that come along with managing finances across borders. So whether you're living in one country but have assets or income in another, or whether you're dealing with tax implications, setting up cash management accounts, or if you're managing savings or planning investments, the Financial Resource Network is here to help for all these kinds of issues. So before I introduce our speaker, I'd like to remind everyone, first of all, that this webinar is for informational purposes only. We are not selling anything on this webinar. We're not making any particular offer or encouraging you to do anything, make any financial decision based on what we're discussing today and any of the content you hear in this webinar. Our goal is only to provide knowledge and insights that will help empower you and give you some better understanding of the financial systems at play and the options that are available to you. So throughout this session, we invite you to ask your questions or send in your comments in the chat below, and we'll do our best to address as many of them as we can during the Q&A at the end of today's presentation. If we don't manage to get to your question, not to worry, we'll be more than happy to follow up with you and get back with you after we can speak further after. Our speaker today has been the head of the Financial Resource Network since 1992 and is an expert in many of the financial issues that often concern Olim living in Israel. So with that, I'm excited to introduce Mark van Gelderen. Take it away, Mark.
Thank you for that very kind introduction. Really appreciate it. Makes it easier. As you can see in our first slide, we're going to be covering 4 critical issues. Hopefully this is what you want. And as we go through the slides, which we'll go through relatively quickly. So what we're trying to do here is to give you a different perspective on what this financial mess is that you're living across, since you're living across borders is, and to give you hope and also help you see that with some work on your part and getting the right advisors, you can actually improve your situation in many cases from what you had before. So we're going to be trying to see if we can help you to ultimately reduce taxes so you get higher returns and also find ways to invest more efficiently so there aren't as many costs. We'll be spending a fair amount of time talking about tax shelters and help you understand how they work cross-border. We'll be talking specifically about how to manage your money when your money is potentially very far away from you in terms of the banks and the custodians holding it and so forth, and how to find the right custodians that will make you have more financial freedom than perhaps you even had before coming to Israel. And we're going to show you that if you have a really great financial manager, organizer, you're not stuck with having to invest in the 1 or 2 ways that he knows how to do it, that you can choose between hundreds of leading financial managers to help manage your money if there is at least a certain minimum that we'll talk about later. So I think that gets us ready to go on to the next slide. All right, on page 2, I'm just giving you what I hope will be most of your goals for attending today. We want to help improve your financial stability. For those of you who are in retirement, close to retirement, or many years before retirement, now's the time to go and evaluate, plan, improve. If you're going to need money coming up to buy a home, buy a new car, or any other major costs like redoing the kitchen or going on your dream vacation, or if unfortunately we're starting from a point where we first need to get out of debt, I think you will find what we're going to talk about today useful so that you can run your life more efficiently and see better progress. Okay, let's go on to the next slide. All right, now that we're on this page, let's talk about what are the major factors that help improve people's financial lives. Number one is you need liquidity, especially in an emergency. You need to reduce the costs. Unfortunately, the investment world is there first and foremost to go and pay people's salaries and to make profits, not that you profit. So what we're going to talk about today is how to find ways to reduce costs, get the same results, but have fewer middlemen taking pieces out for themselves. We're going to try to teach you how to have greater transparency so that you can understand what's going on and see it simply. We're going to try to help reduce the tax burden, not so much in terms of how to go and save on taxes, which is obviously the goal of everyone and important, but that it doesn't take up so much time, it doesn't cost so much to have done, and that it isn't this terrible black cloud hanging over your head in the background all the time. And as a result, we will increase the yields on your cash and on your investments. And hopefully you'll see some new ways of looking at things. Okay, let's go on to the next slide. Okay, this is one of my favorite slides because part of what we're trying to do today is to help you change your way of thinking. Instead of being afraid of the taxman, afraid of the various laws and so forth, we're trying to show you that you can use them to your own advantage. The Aikido martial art in Japan is based on the concept is that everything is done, and if you can see the defects in what your opponent is doing, you can go and use those defects or mismoves to go to your advantage. So you're now an international citizen. So the laws in your prior country and the laws in your new country are not the same. And they're not meant to be copies of one of the other. Therefore, if you are under the broad framework of a legal system and your other legal systems that you're beholden to are different, you can find ways to go and challenge the legal system that is least favorable for you or the tax system and use the other one to your advantage. Obviously, you can't start studying these things from the beginning, but this is what we do as financial advisors, is try to find what's going on and who are the experts available that at some cost, not exorbitant, will be able to tell you how to go and play off one system against the other. And this is so that you can do it legally, and they will know the legal precedents where others have done it as well. And as a result, you're going to work off the back of others who challenged the system and learned how to make it work in their favor. So that's what our goal is today, is to give you some idea of how you can work within a multinational context so that you can move forward and try to take out the best of each system and use it to your advantage. Okay, let's go on to the next slide. All right. This slide is going to take some background for you to appreciate the full power of what we're indicating here. As many of you know, I started the Financial Resource Network with partners back in 1992. And we assumed, like many of you did initially, that we would find similar systems in Israel or other countries where we might be working. The truth was that in the area of cash management, managing your money day to day, there is no country in the world, unfortunately, that does as good a job and offers as many possibilities as the United States with cash management accounts. So we tried, as you will hear when we talk about the Israeli system, to find a way to come close to what can be done with managing your money in a simple system so that everything is wrapped into a single account, meaning that you don't have to look at sub-accounts for different kinds of things you're doing, that it's easy to follow, that it has hardly any ongoing costs, and that you have liquidity, that within a couple of days you can get to everything that was totally invested at the beginning of the week. So there's no place else you can do it like you can do in the United States. And it's time to go on to some of the specifics in the next slide. Now, let's get into some of the specifics of why an American cash management account is such a unique tool and opportunity for people most anywhere. So most American custodians that offer this do not allow you to continue to use it if you move abroad. But there are several that will accept international applications from Americans, from non-Americans, and even for businesses that are registered abroad. You have to be from certain approved countries, depending on the custodian, but the one we work with the most works with 31 countries outside the United States, and particularly here in Israel, we open up every month accounts for individuals, Americans, non-Americans, Israeli companies, etc., so that they can have the advantage of a cash management account. So what are some of the features? As already mentioned, everything is on one statement. A statement is electronically produced via the internet every month, so you see what's gone on previously. As transactions occur, you can go and look up the history, which is almost real time on the custodian's website. You don't have to do it during certain hours or not. And because it is an American and a cash management account, you can get $1 checkbook at no costs and a Visa debit card at no cost at any point. And one of the major features of that international Visa debit card is that you can take out money from a cash machine virtually any place in the world in the local currency, and you will get it at the middle rate. In Hebrew, for Israel, it's known as the shar yitzig, so that you don't need to use money changers at an airport or in your community for very much anymore. You will save a lot of money by taking out money using your Visa card, occasionally paying for things with checks, like when you're going to somebody's wedding or bar mitzvah, and if you receive dollar checks, you will be able to deposit them within minutes using the website and taking a picture of the check, and within 24 hours that money is liquid. So you have complete access to everything going in and out, particularly if it's in dollars. Plus, the custodian provides for money that isn't being used, that you can keep it in indirectly in foreign currencies and get interest along the way, and just have tremendous features. And probably the biggest one for most investors is that investing costs virtually to buy or sell shares. And that's really important, which means if a person is a day trader, they can go in and out of a share many times a day. I assume that probably no one watching this is a day trader, but it means that when you're using a cash management account for your investments, the investment manager doesn't have any significant costs for choosing to move money in and out on a regular basis from good investments, and you don't have the overhang of, because of the cost of investing, you're going to hold on to it a little bit longer and perhaps see something go down, or that you're not moving fast to take advantage of an opportunity. One of the best parts of a cash management account, and you're living abroad, is that they have toll-free phone numbers from all the major countries, so you can call back and talk to a licensed American advisor who can go and help solve your problems on the spot. You didn't get a check that was to be deposited on time. Something seems to be on your Visa payments that isn't yours. They'll take care of it on time, 24 hours a day, at no cost to call them, with really good telephone service. Probably the last important issue that most of you will need to think about, want to talk about, is taxation. Keeping tax records. If you're using an American custodian, they are keeping very good tax records that are easily understandable by the tax preparers and tax officials in any other country around the world, because at this point in time, the American tax reporting system is known to everybody because they regularly have to refer back to it for a number of reasons. So that to do taxes in your other countries, to do taxes back in the United States if you're a US taxpayer, just becomes simpler because everything is properly organized for you. Let's go on to the next page. All right, so as I told you earlier, we didn't find a cash management system available in any other country. So for those of you who are here in Israel, we have tried to put together something as close to it as possible. And that's what we're talking about here, a shekel money management system. We have developed over the last 30 years a very close relationship with a Israeli money manager, Moshe Yonas, who is the dean of asset managers, particularly in Jerusalem. He's been at it longer than anybody else. And we have referred clients to him that are not necessarily interested in investing in Israel, but need to talk to him about two important subjects. The first subject is not covered on this slide, but I'll mention it here, and that is emergency funds need to be kept in the country where you are living most of the time. Everyone should have a 3 to 6 month pot of money that can be easily accessed if needed, or maybe even if not needed, so that bills are paid almost automatically. And if you are out of the country or if you are ill, that you are kept up to date and you can get to money very quickly. So first of all, it is an emergency fund, and now we're talking about a money management system. Because in Israel, unlike many other countries which you may have come from, the majority of bills can be paid automatically through preferably your Visa card or your bank account. It's more expensive through your bank account, preferably through your Israeli Visa or MasterCard or Diners Club card, and that your electric bills, your Arnona, your water, etc., perhaps even rent and mortgage, and anything else that's a regular payment gets automatically paid so that you're not late. Doesn't decrease your ability to question bills and get them corrected and so forth, but at least they're paid on time and automatically. And this is something that you can set up very easily online, and Moshe Jonas can help you get it started. So first of all, you need to have a pot of money here that is available for emergencies and to pay your day-to-day bills. And then he will invest a pot of money that hopefully will cover at least several years, so you don't have to bring in further money. And it will automatically be drawn down every month as your bills are paid. Now, why is this worthwhile? Is because Moshe invests the money into Israeli government shekel bonds, not the kinds that are sold abroad in dollars or euros. And the interest that it's paying pretty much covers all his costs to you. And as a result, you have a system that is automatically taking care of paying your bills every month. You don't have to stay up at night and write out checks or call up and get money transferred or whatever. And if you're not in the country, it continues working. If you are ill or something is going on, it's automatically working. And if you need more money into your personal checking account here or to pay someone, Moshe will be able to sell the bonds within a day or two, get the money into your bank account so that all other bills can be paid. It's a great way to simplify life in Israel, particularly for Olim.
Thanks for that, Mark. We are now going to hear a short presentation from Adam Jorgensen. Adam Jorgensen is a tax mitigator with Veracity, and he's an expert in his field in areas such as tax shelters, tax and different methods of tax mitigation. So we're going to hear that, which is a recorded message. He was not able to be with us today. So if there are any questions for Adam, we're more than happy to take those and get those answered for you, or set up a call with him. Other than that, though, after Adam's presentation, we'll hear a couple more topics from Mark, including investments, which I know many of you are waiting for, and self-directed IRAs.
It's Adam Jorgensen. I'm with Veracity Financial Services. Before I get started, I do want to share my appreciation for Mark and Joseph inviting me to present, taking a few minutes to share some of our tax planning strategies. And also, I should mention that we do not give tax advice. We are not accountants. Any work that we do, we always encourage everyone to include their accountant before making any decisions. So with that being said, let's get started. So I want to touch on what really causes some tax issues, and those tend to be liquidity events. And of course, there's also earned income as well. Some liquidity events include uninspected spikes in income, perhaps a Roth IRA conversion, or now being required to take your minimum distribution from a retirement account. And then there's also appreciated assets, selling a business, real estate, or securities, and these tend to result in capital gains. So some of our strategies here that we'll cover are going to be more your common ones, but we do have some unique, more elegant strategies for high income earners and accredited investors. But we can save those for another day. Today, we're going to focus on qualified charitable distributions, donor advised funds, and qualified longevity annuity contracts. So the qualified charitable distribution, or the QCD, is what allows one to take distributions from their IRA and give that directly to a qualified charity. This is only available to anyone that is 70 and a half or older, which tends to coincide with those minimum required distributions. Some benefits are it can keep you in the tax bracket that you're accustomed to, and it does count towards your RMD, while also supporting a charity of choice. But one of the more unique ones that perhaps you aren't familiar with is the donor advised fund, or the DAF. This is an alternative to just giving funds directly to a charity, which people either they'll give cash directly or some appreciated asset, say end of year, to try to get that deduction. This allows you to make a contribution to a fund and decide at a later date. So with cash, generally you can deduct up to 6% of your adjusted gross income, and appreciated assets that have been held for more than a year, up to 30% of AGI. Now, this is great for high net worth individuals, but also for anyone that really just wants to give to charity. I've seen clients that use this as a way to get their children involved in charitable giving. If you can see this talks about a little bit more in depth how there's no tax reporting required. You can avoid capital gains tax by donating an appreciated asset. And you can also remain anonymous. And thirdly, we have our qualified longevity annuity contract. This may be appropriate for someone who is trying to delay their RMDs, which you can do up until age 85. So what this is, it's a deferred income annuity, which does guarantee income for your entire life, and it helps to reduce the risk of outliving your savings. One thing to keep in mind, though, is that it's got limited access to the funds until payouts begin. And of course, the longer you wait to take those payouts, the higher those payouts can be. So just in quick review, the strategies that I briefly covered are qualified charitable distributions, donor advised funds, and qualified longevity annuity contracts. Again, we always encourage you to speak with a tax professional, and before you make a decision, it's very important that you involve them in your decision-making process. Now, you may have some questions. we're always around available to help you out with those. I work very closely with Mark. I'm located in Florida, so we can figure out times to speak together. Again, we're available. If you need my contact information, please reach out to Mark and we can arrange a call. I certainly appreciate your time and hope to talk soon. Thank you.
All right, let's talk about self-directed IRAs. This is particularly for the American taxpayers in the audience. However, it may exist in other countries. I just have not researched it. You can ask your tax advisors for those other countries if something similar exists. In the United States, most IRAs are done with a custodian, which is either a bank or a brokerage house of some sort. It might be TIAA, which is just slightly different. But there are some trust companies in the United States that are there to handle assets that are non-standard, meaning that they aren't in a brokerage type format. They're not listed on a bond or a stock exchange, or they're not certificates of deposit from a bank, etc. They're most often used for holding standalone real estate investments, perhaps even actual real estate itself, hard assets like gold and silver, collections that you might have of coins or stamps or other things. And these are called self-directed IRAs. They are done by very specific custodians that have been approved by the IRS. And these custodians will actually take over the ownership of those assets in trust for you during the period of the IRA, and then return them to you as you either start using them or selling them off, or shutting down the whole thing, or when a real estate project matures, etc. So there are some very specific asset management companies that do self-directed IRAs, and this is to tell you that not the standard things can be in an IRA, and sometimes these are some of the best investments you can make. Let's go on to the next slide. All right, so we're talking about investing, finally. All right, most people are interested in this. So before we go into the details on this slide, there's one rule that isn't discussed enough, and that is, what is the most important thing to think about when you're investing? And the answer to that is diversification. No investment you do can be totally guaranteed. People kept their savings when they lived in the USSR all their lives, and then one day there was no USSR. And the same thing with people who were in Japan and Germany in World War II. So even what is considered the safest investment, which in the investment world is generally government bonds, they can be wiped out. So people need to be diversified. And diversification means many different things. Obviously, we're talking about don't put all your eggs in one basket. But what is one basket? It means more than one different kind of share or bond. Or who's holding those shares and bonds? Should we have more than one different custodian in case they go bad? And if I'm living internationally, should I be diversified between the currencies that my investments are in? Because currencies go up and down, et cetera, et cetera. There are 12 different areas of diversification before we start talking about investing itself. So think about it and practice it. So the very first thing, which is a form of diversification, is doing nothing. And we just went through a higher inflationary period. They're talking about that ideal inflation would be around 2%. So that means that if we're doing nothing, we lose half of the value of our money in 36 years at 2% inflation. So every day we're doing nothing, we're falling behind, although doing nothing and holding money in a hard currency may be better than investing during an unsettling period, like we just went through here in Israel. So we can be doing nothing. We can be doing great diversification, which is in terms of a brokerage portfolio or your IRA or other tax shelter at a broker, which is to go and diversify between local shares, international shares, bonds, cash, emerging markets, commodities, etc. That could be what's considered a classical balanced portfolio. Even if we decide that we want to take low risk and just have a bond portfolio, we should be diversified between different countries' bonds of leading countries or funds that represent them, because it might not be able to buy those foreign bonds cross borders very easily. And corporate bonds, some speculative bonds, which are generally known as junk bonds, short-term bonds, medium-term bonds, and long-term bonds. Some people are interested in getting involved with their own business, but they can't really afford to put all their assets into that business because businesses are vulnerable entities. And what's working today might be wiped out tomorrow by a change in rules, regulations, laws, wars, etc. Now, when we're talking about that in terms of business ownership, that starts getting us into a hybrid area between owning shares and owning directly into a business. This also is a hybrid area when it comes to real estate. And we'll talk about that in another slide. But there's one area that I want to talk about before we get to that, which is alternative investments. Back 10, 20 years ago, the hot investing area was hedge funds. Today, most of them are not doing that great. And the day of the hedge fund seems to have been past for the most part. There's also venture capital funds, most of which don't do better than a good ETF or mutual fund. There's private equity, structured products, etc. But in the real estate area, that is very common to have a structured product. Very often these structured products are called private placements. They're called alternative investments. And they might also be called a form of hard asset investing. Those are generally things that are not well regulated because they're just an offering for a short period of time for a very specific project or purpose. But they very often are the things that provide the highest rate of returns. Let's just finally talk about managed portfolios. You can do it yourself. You can find mutual funds, closed-end funds, and exchange-traded funds that go and put together basically balanced, various goal-oriented portfolios that give you a little bit of everything. And some of them are very good. A lot of them are not particularly exciting. And this is where you may need some help. So if there is anything that we've just mentioned that is something you need to know more about, you have questions about, that you want to explore further, please go to the button that's now on the page, on the side of the page, so that you can let us know that you need further assistance. We're putting this button here especially for you so that if managing more than your cash is important to you, this is the time and the place where we can easily get to you and get your questions answered. Let's go on to the next slide. Structured products. This one, probably for the majority of people, will not be appropriate, but it's worth your while to know what it means. In America, structured products have not matured yet and are generally not a great investment. In Europe, they are a terrific investment. So if you're a person who has money in euros, the British pound, Swiss franc, etc., pay attention closely now. And for those of you who are not in those currency zones, this is just background information that in a few years may finally come to the major markets in the Western Hemisphere. A structured product means that there are two or maybe three investments you're buying, never more than three. And basically, a structured product has as its advertising, invest in the S&P 500 or the Euro Next 50 for 3 years, 5 years, 7 years, and have no chance of losing your money. Okay, that's a structured product typically. Sometimes has a different name, which is a capital guaranteed investment, meaning that your capital put in is promised that you will get back in full, and if the investment is successful, you will get back a lot more. So let's talk about a capital guaranteed structured product that is saying that you will get back all your capital at the end of 5 years. And if the S&P 500 is up above its starting point on the first day of the investment, which is a specific day that is given to you before you send in the money, then you will get 1/2 of whatever it is up. So if it's up over the 5 years, 50%, you'll make 25% on your investment. If it's up 10%, you'll get 5. If it's up 100%, you'll get back 50% plus your initial investment. How do they do this? It's very simple. Is that if it's a 5-year investment, they're buying a 5-year zero coupon bond, which means it's a bond that is paying out interest so you get all the interest rate at the end. So the bond is selling for $1,000 and it's promising a 5% interest from a AAA bank or from a government. You might be able to buy it for 90 cents on the dollar. And that gives them a profit, management fee. They'll take out 2% or whatever, and they'll have 8% left to buy futures. They'll buy options on the S&P 500 that mature in 5 years. And it's a bet with an insurance company, a mutual fund or something. that in 5 years, you will get what I invested in it if the index hasn't gone up, which for the insurance company or fund is a way to buy insurance against a downturn, which is relatively inexpensive. And if it's up, you wind up getting the coupon, meaning that you're getting whatever the S&P 500 or whatever index it is or group of shares it is up. So a structured product is a bet, but if it's done with a capital guaranteed structured product, you cannot lose nominally. Obviously, you're losing against inflation while the money is tied up, but that's relatively low risk. And this is extremely popular in Europe and other places because they rarely have wars, including the current one that's going on. And as a result, they want something that is giving them a guarantee that they won't lose their money if all hell breaks loose, and gives them a chance of upside that is better than sitting in a savings account. Okay, I hope that you found that interesting. Let's go on to the next slide. All right. Real estate is something we can't ignore. No matter whether we rent, we buy, we go shopping, it's all around us. And there's a couple of important things that I want to point out to you and that maybe will be of some help in terms of putting it into perspective in terms of how it ties into your financial well-being in life. So first of all, in Israel, many people say, even if you've made Aliyah, you're not on the train until you've committed to a piece of real estate, a long-term lease, buying, etc. Once you have some kind of real estate connection, it really ties you down in Israel in terms of feeling you're part of the country. And I think that's true in any country you might be. However, here in Israel, I need to point out, and I'm not going to go into detail, if you're buying real estate, everything here works backwards compared to the way it works in Western English-speaking countries. And one of the keys to be involved is to know what contract law is here in Israel. Saying that you're interested, if you do it in the wrong way, means that you have begun a buying contract when you're looking at real estate. You cannot write down numbers and share it with the seller and so forth. Therefore, before you begin doing real estate in Israel, the first step is to have a lawyer, to have someone who can be an engineer to assess what's going on, and to perhaps have your mortgage lined up, because in Israel, real estate transactions from beginning to end very often happen within 2 weeks. And everything needs to be in order, and if it isn't in order and you're in the middle of it and your mortgage isn't available or you're having trouble getting the money from abroad, that's default of contract, and that can be extremely serious. Now, let's talk about real estate more in terms of the investment area. Obviously, what I just spoke about in terms of buying direct real estate, maybe for yourself and maybe for your heirs and maybe for renting out, that's fine. That's a separate discussion. But let's go and look at real estate in terms of a passive, more of a passive investment. And there's many ways to do that. It's important for you to realize that real estate historically, and in particular in terms of our Jewish tradition, is always considered very important. Directly and indirectly, repeatedly in the Mishnah and the Gemara, the Talmud talks about that we should have 1/3 of our assets in a fairly liquid area, meaning that an emergency fund, bonds, and other things that you can get to quickly if needed. 1/3 should be invested in businesses and other things, and 1/3 should be in real estate. So let's concentrate just on the real estate part right now. Real estate can be done in many different ways, and you're involved. When you're buying a business through a share, and it's a business that uses a lot of real estate, like if it was a fast food franchise or a Walmart that owns it, a lot of its worth is the real estate it's owned. That goes towards a real estate allocation. There are what are called REITs, REITs, real estate investment trusts, that are in every country, including Israel, although Israel's REITs are not mature yet. They're very recent and don't have a strong track record. But REITs in all the other countries have strong track records. You can buy them as a share, and they're investing in shopping centers, living communities, hospitals, etc., and they can have very steady and high returns. But perhaps the most important area that you might want to look at, which is one of the reasons why the Hutners are helping me with this, is they're real estate investment specialists, and they're doing small real estate projects that are coming from different well-organized, with track record developers or organizers that give much higher returns than generally what you can find doing it yourself, doing it through a REIT or other ways. And if this kind of thing interests you and you want to explore it, it involves making a larger individual investment, and it involves having some patience, and it involves, in most instances, getting some regular retirement income at a higher rate of return than you can get from a bond or most income-producing securities. Then if that interests you, probably should press the button on the side of the page and let them know what you're interested in or what your questions are, and the Hutners will be back in touch with you. So the real estate area is something that everyone needs to think about and try to have an allocation. And if you do it right, it can be very worthwhile. If you do it poorly, it can be a disaster. So you need to be working with people who have experience, who have vetted who are the good players and the bad ones. Here in Israel, that's particularly important because the kind of real estate projects for a place to live or a place to invest in are known as kfutzot rechisha. And many of them a decent percentage of them run into problems. So before you would get into a kfutzat rechisha here in Israel in particular, you need to go and know its pedigree. You don't get involved with something that is somebody's bright idea and doesn't have a long and successful track record. Okay, there's a lot more to talk about. If this area interests you, you need some help or whatever, please do leave us a message and we'll get back in touch with you. Let me take a couple of minutes and do a little bit of tooting our own horns. What we do is something significantly different than many of the pitches you get reading the Jerusalem Post, the Wall Street Journal, or others who say, we're financial planners and we're here to help you and so forth. Unfortunately, a lot of those people get their designations so that they can steer their clients into the things that they are licensed to sell. We're different. We take a very different approach. We're not licensed in Israel. We're not licensed elsewhere. We are family office managers. What does that mean? That means that we see our job as being your general practitioner, like when you go to get medical help. We know what is out there. We're familiar with it. But if you have a pain in your stomach that is really fierce or has been coming back repeatedly, we send you to a specialist. We do the same thing. And the way we're set up, I think, is quite interesting and worth hearing about. We're family office managers. We will manage that part of your assets that you need help, not picking stocks, not running your bank account, not having access to any of your money, but making sure that things are moving in the proper direction. And for those of you who are a little bit higher net worth, let me tell you that by us working with people for the last 30 years who are not often having a lot of money, we've learned how to go and save lots and lots of money for these people so they can get ahead. And as a result, we probably do the family office component of helping people move forward so that they save a lot more money than they get by going into fancy wealth management offices where you're having to pay for a lot of overhead. We keep things simple and straightforward. So we will send you a chart showing you all the different areas where we can be of help. We are not the masters in most of those areas. Our sweet spot is to know a lot about investing, but we don't invest your money for you. We send you on to a manager who we believe has done a good job. And as indicated earlier, we have hundreds that we can use. We work with half a dozen to a dozen different custodians in various different countries. We work with people who are totally licensed in their areas. There's no nonsense. We try to do full disclosure, and our goal is to give you pros and cons before you move forward. I hope you find this useful, and if you think you need help in an area, please press the button on the side of the page, and someone will get back to you, find out what your need is, and get you tied into the proper person to help you. Okay, we're ready to go and call it a day and get ready for your questions and answers. Right here, or if you need it, and we hope you do, it's worthwhile for you. This is how you can contact us directly. You have my name, my phone number, my cell phone. Thank you very much for being patient, having sat through this whole discussion, and we hope that we'll be able to answer some very interesting questions with filling in some of the missing pieces of information here in the next few minutes. Thank you very much for attending. If it's appropriate, hopefully we'll meet you at some point in the future.
Thank you, Mark. Okay, so now we're going to go to the Q&A. Hold on, let me just make sure that your mic is still on. Okay. So first of all, Nina is asking what a custodian means. That was in regards to the Moshe Jonas segment.
All right.
She was asking what a custodian means. Could you explain that?
Okay. A custodian is any type of financial institution that holds money for individuals. So it can be a bank, it can be a brokerage house, it can be an insurance company, it can be a trust company, it could be a foundation, it could be a number of other types of financial institutions that people entrust with their assets to go and manage their money, provide them with interest or whatever. The custodian is the person holding your money, the organization holding your money.
Okay. Monica was asking if Moshe Jonas charges the costs of the interests earned. Can you clarify that?
No, he has set fees. When interest is high, clients generally come out ahead. When interest is low, they're winding up having to pay him something, but the amount that it costs is certainly worth the service that is provided.
Okay, Monica, let us know if that helped, if that answered the question. If not, we'll be happy to get back with you further on this. Gloria wanted to know, can you give us the names of the U.S. custodians who allow CMAs from Israel? I think you know the answer, but go ahead.
The one we use is mainly is Schwab. Another one is RBC U.S. Bank, the American version of the Royal Bank of Canada. Another one is Pershing, and then there's a number of smaller ones. Each one has its restrictions in terms of what they're willing to do for people who live abroad. If you have a U.S. address, then there are many more possibilities available.
Okay, great. Let us know, Gloria, if that cleared it up for you. Ruthie wanted to know, can you give examples of structured products in Israel?
As mentioned, Klutzot Rechisha are structured product where you're giving a developer or a lawyer money so that he will put together a real estate project. It's most often done where people are trying to get an apartment at below market cost. But the problem is that, unfortunately, a significant percentage of Klutzot Rechisha run into snags very often because the people organizing it don't have enough experience and haven't thought through all the possible problems they might run into. And as a result, these projects either don't get done or they are delayed for many, many years until all the snags are worked out. It's often done in commercial real estate. It could be done in terms of a startup business. There are many different possibilities.
Okay, hopefully that clears it up. Gloria has had another question asking if structured products are considered PFICs.
Yes. So an American can't buy generally a structured product from Europe because it would be considered a passive foreign investment company.
Okay. Gloria, let us know if that clears it up. If not, we can get into more detail. Michael was asking if you can explain why ownership of your home is often not appropriate for post-retirement Olim.
That's a great question. The number one reason why it might not be appropriate is getting back to emergency funds. A person later in life may need income for years or even decades because of declining health. And if there isn't pot of money that's easily available besides the real estate, it means that you might have to sell doors and windows in order to pay your bills, which nobody does, which means that they might have to do a fire sale on their real estate so they can raise cash. And particularly if that's done within the first couple of years of ownership, chances are, because of the cost for buying and then the cost for selling, that there will be a substantial loss of income. Plus, people who have declining health are generally not in a good position to have that extra stress.
Okay, great.
Does that help?
Hopefully, I trust Michael will let us know if that cleared up for him. Let's see. Devora is saying, regarding the real estate investments of the kind managed, what is the average amount invested on the lowest end? Just want to figure out this one. Okay, this is something we can get back to Devora about. This isn't, there is not one answer, obviously, so we can definitely get back to her. Okay. Okay, let's see if there's any other questions. If there's anything else we didn't address, please let us know here in the chat. If there's anything that we missed. I'm trying to scroll back.
There's one thing that I think is worth talking about is we went fairly quickly into very specific kinds of tax solutions. Many people are not taking advantage of the tax solutions that are provided by the government of the countries where they hold passports or are living. And I'm talking about things like 401ks and various kinds of IRA type investments for Americans, RSPs for Canadians, British equivalent superannuation plans for the Australians, etc. People don't properly take advantage of these systems. And these systems tend to be cross-border, meaning that if they are tax-free in the country where they were originated, they will almost certainly be tax-free as you continue living elsewhere. So they have advantages. They have penalties if you need to take out the money early, but those penalties usually are not so bad that if you hadn't used the tax shelter plan of your country beforehand, you're being penalized more so than if you kept the money in a regular savings or brokerage account. So it's really important. Israel has some terrific plans as well. Kupot Gemel, Bituach Menahalim. It's worthwhile to look into them. Please be aware that for Americans doing a plan, the name is escaping me right now, that's designed for a Shabbaton, just can't think of it right now, is for some tax preparers doing American tax is a problem, but you should talk to your tax preparer before you make major commitments to things other than Kupat Gimel and Bituach Menahalim. I found it interesting that this weekend's Torah Tidbits had a big full-page ad on the back about tax-advised funds. That seems to be the flavor of the month right now in terms of attracting people to tax advisors and so forth. Adam mentioned it in his presentation. It's a fairly new and interesting concept, and there's nothing complicated about it, and it's something that can be done on very short notice, like even now before the year ends, and you can put money aside and not decide until later, even years later, exactly who you're going to donate it to. So there's a lot going on in the tax avoidance area, and if you need help, we can help you find the right advisors.
Okay, Mark. It seems like that's all the questions that we got in. So much appreciated. Thank you all for joining in, and we look forward to speak with some of you at a later time. All of you who requested a follow-up, we'll be doing that in the coming days. And we'll reach out to you, make sure we get all your questions answered. And if you need a call with either Mark or Adam or myself regarding anything to do with real estate, we'll be happy to do that. Thanks again for joining, and have a great evening.